Imbalance zones. This is literally one of my favorite confirmations when it comes to institutional trading, smart money concept trading. And the reason why is because these are so clear to identify once you fully understand and grasp how it works. Now, I want you to understand before we get into the charts, I want you to understand that imbalance zones is like leaving your money behind. Okay? So if you were to go to the store and you paid for something that cost $10 with a $20 bill, and you walk out of the store, you're going to remember and say, hey, I have a $10 change. I need to go back and grab my change. So that is pretty much the way that the market sees and views these areas as leaving their money behind. Because areas of imbalance are going to be areas of insufficiency in which the market has to rebalance itself so that way it can continue going to its overall direction, either creating a potential accumulation or distribution from that zone and continuation. So let's get to it. Before we get into the market right here, I want to show you guys exactly how it is that you can identify a zone of imbalance. So at this very moment right here, we can view the following. This would be considered as a zone of imbalance. As we can see, the wick of this candle right over here is going to be the top point of my imbalance. And right in this section over here is going to be the bottom point of my imbalance. Now, this zone of imbalance is insufficiency in the market, meaning that the market left its change behind. Now, how am I able to spot these areas of imbalance, and what do these areas of imbalance work for? Now, before I get into that, I want to show you guys this example over here, how market went and fulfilled the imbalance. Now, previously, there was a zone of imbalance right in this section, which was the bottom portion. This was the bottom portion. And then we had a top portion right over here. Okay, we have the top portion right over here. And as market goes ahead and pushes down, it's closing the zone of imbalance. So it's closing this inefficiency. Market goes down, closes the inefficiency, and then finally leaves a little point of inefficiency down below. Market pushes up one more time, and then as you can see, market finally comes and closes the gap, meaning that I went ahead and closed that insufficiency, so therefore there are no more imbalance in that section. And that is exactly what I am waiting for over here on this imbalance zone, for market to go ahead and close the gap out. As we can see right at this very moment, we can see how market has not closed that gap out, and we still have insufficiency to be fulfilled. Okay, so how is imbalance formed? So let's look at it from this perspective. Let's go ahead and see this right here. Market's going to have overall moves to the upside and downside. Now let's say for example that we are seeing a bullish move to the upside. And when we start seeing this bullish move to the upside, there are going to be candles that are going to have our wicks, and there are going to be candles that don't have wicks. Now typically the ones that don't have wicks are leaving market inefficiency behind. So let's say this candle right here had a wick right in this section, and this candle right here had a wick right in this section. Okay, so what ended up happening right in this area, there is a little zone of imbalance. Now, why is it called imbalance? Market is not balanced. Market is going to be balanced when there is buying and selling from both sides. So we do understand this, that if market, for example, let's say this candle was bullish at one point, there was buying positions, and then market came down, and what made this wick right here was selling positions. So we know that within this whole area right in this section, there was buying and selling positions. Now let's say right here that there was bullishness. There may have not been selling positions at this very moment, but the ones from the past go ahead and block that out. Therefore, there was selling positions in that price range. Market keeps on pushing up, and then let's say that it did have a small wick. Okay, let's say it had a small wick to the upside. So we did have some selling positions right here, but only to that side. Now what the next candle's duty is to go ahead and fulfill all the selling positions that were not placed within the zone. Now if this candle does not fulfill all this imbalance that was created previously, then that means that there is inefficiency in the market. And if there is inefficiency in the market, what market will tend to do, it will tend to retrace back into those zones. Now let's say this candle right here went ahead and had its major wick right over here, fulfilling this imbalance. Okay, so there was imbalance to the moment, and then this wick fulfilled it. So we are leaving this behind. And since we are leaving this behind, what market go ahead and do is come back, and this imbalance zone will act as a magnet to the downside. So with that being said, market will do what it can to come back and fulfill that inefficiency. Now do note the following. When market comes down, it could also be leaving inefficiency on those candles that were moving to the downside. So in this case scenario, inefficiency meaning imbalance right in this section. So what is the next thing that could potentially happen? The next thing that could potentially happen is that market will do what it can to eventually come back up and fulfill this inefficiency, which is considered as your zone of imbalance. So understand that a zone of imbalance is an area in where the market had only either placed buying positions or only either placed selling positions. So there was not an equal factor of buying and selling at that same price range. You always want to have buying and selling at that same price range. And if you don't have buying and selling at that same price range, market will eventually come and rebalance itself. So let's go over to the market real quick and just show you guys a quick example how market is rebalancing itself all the time. In this case scenario, what do we see right here? We see a nice zone of imbalance. Now, how am I able to spot that out so quick? The reason why I'm able to spot that out so quick is because I am able to identify that this right here moved to the upside fairly quick and then had a huge spike to the downside. Typically, areas where you have huge spikes to the downside or huge spikes to the upside are going to be leaving inefficient levels in the past. So in this case right here, we have that inefficient level and that inefficient level, leaving our overall inefficiency within this zone right here. So eventually market will go ahead and potentially fulfill that area of inefficiency. As we can see over here in this section as well, we had an area of imbalance to an extent where we can see how market had left an area of inefficiency, and this whole area right here, there was only buying scenario because this was a bullish candle. What happens? Well, later on in the future, as we can see, market comes back down, fulfills that area of inefficiency, and then comes back up and continues doing its overall move. So imbalance zones are very special for me because they help me understand where market could potentially direct itself towards the future. These are areas that I like to take in consideration for potential targets, either for my, let's say if I'm buying, that's going to be my target that I'm going to be looking for. If I'm selling, that's going to be a target that I'm going to be looking for. Let's say in this case scenario that I was buying. Well, if I was buying, I'd be looking for this areas to be targeting potentially. Now, is it an area for you to take in consideration for a selling opportunity? Potentially, yes. But in order for you to be able to find a selling opportunity in this section is going to be by you being able to identify an area of distribution, or if you are to look for a buying opportunity down in the imbalance zone below, then you will be looking for a potential accumulation, and those are going to be things that we'll be talking out on the next lessons. So with that being said, I hope you guys enjoy this quick lesson of imbalance zones. I preferably love talking about over imbalance zones. If there's something else that you would specifically like me to go ahead and talk about, feel free to put it in the comments down below. As always, subscribe, and I'll see you guys on the next lesson. Hope you guys enjoyed.